All right, guys, back to work. Back to work. A fantastic day comes to an end. Boy, what a move this afternoon. Jay Powell speaks, and the markets, they always listen. And we got two big clues for tomorrow. A big move this afternoon and big CPI news coming tomorrow. Now, anytime I see big move in the afternoon, big news tomorrow morning, those two clues, they tell us there are two very specific, very easy money-making trades we're tracking for tomorrow. We're going to cover all the details in the video tonight, give you guys an easy roadmap. I want everyone to make some money on CPI tomorrow morning. Now, before we jump in and talk my favorite trades for CPI Thursday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you enjoy these videos, if you like these lessons, hit that like button for me and give me a shout out, give me a hell yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. But enough of the intro, Joe. Where is the best trade setting up for CPI Thursday? We got charts are all ready to go. Nasdaq, triple Qs, the E-mini, and the S&P, and the SPY. I have four very important clues right now that are tipping us off to where the best money-making trades are for tomorrow. One of those clues is right here on these hourly, these 60-minute time frames. We are bullish overall on the S&P SPY, bullish overall on the Nasdaq and the triple Qs. I like to use these 60-minute time frames to give us the overall directional bias. Great for direction, but you know what these higher time frames don't do? They don't give us levels of support and resistance, and they don't give us the entry signals, the entry timing tactics for tomorrow. I have three what I think are more important clues on some faster time frames, some tick charts that will help us wrap this all together and make some money on CPI Thursday. Before we jump in though and talk about those three more clues, let's check our schedule for tomorrow, because tomorrow it's kind of your average Thursday. Yeah, we always have news on Thursday morning at 8:30, but we get a big CPI report coming tomorrow morning at 8:30 Eastern time. We heard from Jay Powell this morning on Capitol Hill, and he kept on saying he was anxious to see more data on inflation. So we're going to see more of that tomorrow, and we know the markets are going to react to that. So keep that on your radar for tomorrow morning, 8:30 Eastern time. That big CPI report. Everybody wants to see if we're making some progress on the fight against inflation. We're going to set tomorrow, and I would imagine it's a very big market catalyst tomorrow morning. Now, it's good to know when the news is tomorrow, but we all know by now the money is made on the chart. So back to our charts now. I have three, I think, more important clues to cover now on some tick charts, because I love to use these higher time frames for overall direction, but they're not going to help us time the entry for tomorrow. Let's now drill down to some faster time frames, some tick charts. This is a 7,000 tick chart, upper left-hand corner. We're going to use these for entry timing tactics. And of course, that, my friends, is the 21 EMA. Pretty much the only indicator we need to find lots of winning trades each week. Now, there are three more important clues here on this tick chart. First clue is this trading range we saw from last night's video. Anytime we see a range breakout like this, we know the most amount of buyers are waiting on a breakout pullback, right? So anytime we see a range breakout, we always look for a breakout pullback. Now, we may not make it all the way down to that breakout pullback zone. A second big clue here for tomorrow is that big move. Boy, what a move this afternoon. Now, anytime I see a big move in one direction, we know that I don't want to buy high up here. I want to buy nice and low down here. And to do that, I always look for this sequence. It's a two-legged pullback, a retest of that high, and if we're lucky tomorrow, a double top reversal. So whenever I see a big move, I'm looking for that two-legged pullback. There are ways to buy it on that two-legged pullback. There are ways to sell it on that double top once the buyers take their profit. We'll talk about the entry tactics on that here as we go deeper into the video. But more importantly, though, is that big news tomorrow. This is kind of where the magic comes together here, because anytime we combine a big move this afternoon with big news tomorrow morning, there are two types of specific trades or strategies I look for the following day. One of them is that two-legged pullback. The second one, though, is almost more lucrative than the first one. We'll cover that a bit later on in the video on the Nasdaq chart. So if you want to make money tomorrow, make sure you watch all the way to the end here tonight. So two types of strategies after a big move this afternoon and a CPI big news tomorrow. Let's cover that two-legged pullback because that's the most common for tomorrow. Now, when I say two-legged pullback, there are so many ways to make money with two-legged pullbacks. First things first, when I say two-legged pullback, you want to think about a measured move that goes a bit too far. So inside our free video course, we talk about measured moves, right? A, B, C, D. When I say two-legged pullback, think about a measured move, an A, B, C, D that goes a bit too far. Hopefully it goes all the way back into that breakout pullback zone. But again, we may not get that far tomorrow morning. Most importantly, though, is get that two-legged pullback. Now, once I get that two-legged pullback, remember, this may keep on going lower, that big CPI report tomorrow morning, so I'm not going to pick the bottom on this. What I'll do is I'm going to look for what I call a failure pattern first. I'm going to wait for the price to pull back to that moving average and look for ways to trap these sellers getting short. See, on a faster time frame, this will feel very, very bearish, but don't forget that 60-minute chart. We're very bullish with a big move higher. This is probably just a pullback. So let's trap those bears in, let those sellers try twice, then we know right where their stops are. We can squeeze those stops and snap back up to retest the high. Now, on the way back up to retest the high, this is where a trap pattern comes in. I got a bunch of emails from you guys making money off these, right? Like on that one today, the trap pattern. Most important thing on a trap pattern is a strong run up, a shallow pullback, and a higher high in price. Last night in the video, we talked about separation, right? How that pullback won't pull back all the way to the moving average. I want that separation, that higher high in price, and I want that run right below that low. That's gonna give us now that bear trap pattern we need to finish off the move back up to retest the high. Now, once I get back to retest that high, what happens up there? Well, it's a big move higher. So anybody who bought the dip, bought the failure pattern, or bought the bear trap pattern we saw here, they're taking their profit up here. Is that a good place to be a buyer? No, right? We don't want to buy high. We want to buy nice and low, right? So one of my favorite trades after a big move up like this is once we go back to retest that high, let's trap in some rookie buyers who are chasing this market higher, trap them in, and pull the rug with a bull trap pattern. Now, bull trap patterns come in lots of shapes and sizes. One of my favorite bull traps is a crown reversal. It's a lower low in price and a move just above that prior high. We call these crown reversals. These can be very, very lucrative trades after a big move up. And of course, the target is always to go back down and retest that low. So I mentioned earlier, there are two types of strategy I look for when I have a big move in the afternoon and a big news tomorrow. This is the most common scenario. We'll cover the more lucrative one later on in this lesson tonight. But again, it's a failure pattern after that two-legged pullback. Remember, think about that a bit more than a measured move. Trap those bears in. Don't pick that bottom. 2 tries, squeeze those stops on the way back up to retest that big high. Look for that separation, right? That separation off the moving average, and look for that bear trap pattern below that prior swing. And then once we get back up to retest the high, please do not try to pick those tops up there. Let those rookies wrap that rope around their neck. Once those buyers are trapped in, now think about this. All of their stops are sitting right there, right? If you're caught long up here and you get stopped out, the only way out of your long position is what? To sell your way out. That is the fuel we need, that stop run we need to run this thing all the way back down and take out that low. And then we do it again, right? Do it again. Trap them in again. Back up we go. This will oftentimes rotate back and forth, right? So one key strategy, failure pattern, bear trap pattern into that crown reversal pattern for tomorrow. Now, let's slow down for a second because I know most of you guys and gals watching right now, you guys know these patterns. You know what we love: failures, traps, crown reversals. But if you're watching right now for the first time, I look at things a bit different than a lot of people do here on YouTube. So this might be a brand new language for you, but don't you worry. I teach this entire strategy. I have hundreds of examples of failures and traps and crown reversals. I teach all of this in our free video course. I'll put a link up top for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room, so we always know where the best trades are going to be each day. And then most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn failures, traps, crown reversals, and a whole lot more. It's all covered in that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're still missing good trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit link up top there, grab that link, take that free course. It's perfect for someone who's serious about making money in these markets. And also don't forget too, I'm going to put all the important links tonight, the description of the YouTube video. I'll put the free course links down there. I'll also put our trade room information down there. We trade together every day at 8 o'clock Eastern time. I'll put that details, description there. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on Twitter or X, give me a follow. Again, all the details tonight, description of that YouTube video. So once again, we now know that two-legged pullback, trap those bears in, get that bear trap on the way up, and then crown reversal off of that high. Now let's talk about some variations of this sequence, because this is kind of the home run, right? But the markets are always throwing us curveballs, aren't they? And again, we're going to cover another strategy here in a moment later on the Nasdaq, so don't go anywhere. Now, one thing I talk about a lot of times in these videos is to buy the double bottom retest. Very, very important. We have CPI report tomorrow morning. We may see a very strong run down tomorrow morning back into that range breakout pullback area. If we see a very strong run down with that CPI report tomorrow, there's a very good chance we're going to pop it up, retest that low, and then make that move going higher. So we see a lot of times in our trade room where we'll get that two-legged pullback, we'll get those bears trapped in off support, we'll get a nice easy winning trade off of this, but we run up, we hold the underbelly of that first leg down, we take our profit. I always take profit there at the underbelly of that first leg down. It's a winning trade, but again, because of all of that momentum going lower, the bears come in and they whack it right back down again. Most importantly, this is not a bearish reversal. Remember, we are way, way bullish right now on the 60-minute time frame. So if we do see that failure pattern that snaps up and then runs back down to that low, these are not a reversal. These are a gift for the trading gods, because now think about this. Anybody who sold short right there, where's their profit target? Their profit target's back at that low. So sellers up here become buyers down here. This is the worst place to sell. You never want to sell at a double bottom in an overall bull market. But I'll tell you right now, I chased these all the time when I was a rookie almost 20 years ago. So let's do it again. Another bite at the apple. Let the bears come in. Try once. Try twice. These are rookie bears right here. These are inexperienced traders, tight stops, small accounts. They can't defend themselves like bigger lot traders can. Trap those bears in. That's that failure pattern we teach in our free video course. And then again, what's the secret? The secret is get that separation off the moving average. Like back here, right? The secret is get that pop up, that separation, and get that trap right there. We talked a lot about this last night on the video, of course, right? But get that trap right there. Get that pattern right over here. Again, it's a higher high in price, that trap below that low. And these are oftentimes the most lucrative trade, because now everybody's getting squeezed. And again, where's the target? The target is back up to retest the high. So again, we might with a double dip this tomorrow, get that two-legged pullback, and then do it again, failure in a trap combination, back up to retest the high. And last but not least here, I guess almost last but not least, two more variations is a V bottom. Again, I love the idea of a nice deep pullback, trap the bears in and squeeze those stops back up again. I love that idea. But you know what? There might be so many buyers down here, we may not get the chance to trap those bears in. Sometimes the market pulls back like this. There are so many buyers, it just whoop right back up again and V bottoms off of that low. These can be very, very difficult on our discipline. Because what happens is when it pops back up, it almost always begins to grind going higher. That grinder, if you're anything like I am, that grinder will drive you crazy because you're trying to find your way in. Whatever you do, do not chase after that. Your patience will pay off. Mark that high, mark that low. Then what do? Look left, find some prior swings, and I want to get that first test off the low of that channel, right? This channel there, draw a trend line off the highs, find that channel off the lows. And again, I love traps below prior swings. You'll learn all about traps in that free video course. I mentioned linked up top there, upper right-hand corner, so make sure you grab that link and learn about traps. You can thank me later on that, by the way. This could be a bear trap. Like I'm showing you here, a lot of times, if we don't have a swing to work with, this becomes a failure pattern. Failures are below the 21 EMA, a failure into pullback combination, a failure into bear trap combination. We know where the market wants to go, right? It wants to go back up and take out that high up there, right? So if we get that V bottom off the low, watch that grinding motion higher, mark off that trend line, find that low, right? And buy that first test, that bear trap, that failure, pullback combo, trap combo. Again, this will make a lot more sense once you guys get into that free video course I mentioned earlier. Last but not least here, I promise now that we'll grab the Nasdaq here and talk about strategy number 2 in a moment here. Last but not least here is a shallow pullback trap. Shallow pullback trap. What I mean by this is let's say overnight, let's say we go higher here overnight and then we get a pullback like this. Right? We don't get that deep pullback we want. I want a deep pullback right now because it's a big move higher this afternoon. If all we get is a shallow pullback, what is my concern? I'm buying relatively high. Whenever I'm buying relatively high, there's one pattern I always lean on to protect myself. It's always going to be a trap pattern. Now, traps are very, very simple. Bears try once, bears try twice. Again, get underneath that low, and that is a bear trap. Now, do you see the difference there, right? Because again, if we get a big two-legged pullback, I'm not so worried about buying too high. I can trap the bears in, squeeze those stops. My risk is here. My reward is up there, right? I can be pretty aggressive with what I call a failure pattern, right? If I have a nice deep two-legged pullback. However, if I don't get that deep two-legged pullback, if all we get is a shallow pullback here, yeah, now that risk-reward ratio becomes a big concern. And the way that you fix that problem is you fix it with bears once, higher high, bears twice, higher high in price, trap below that low. The way you fix that problem is you don't buy up here, you don't buy up there, right? Because again, think about the risk reward now, right? Your risk is right here, reward is right there. Not horrible, but you're not going to build a career off a one-to-one like that, right? Professionals are going to get in early on that. They'll get in right there, right? They'll get in off that bear trap pattern. Now their risk is here, their reward is right there, right? See, that 1 to 2 risk reward, you can build a very profitable career off that, and that's where smart money is looking for a shallow pullback. So keep those variations on your mind for tomorrow. We'll keep an eye out this tomorrow morning course in our trade room. And again, like I mentioned earlier, we have 2 types of strategies look for tomorrow. One of them, the most common, is that two-legged pullback, that retest of that high. Let's now go to the Nasdaq now, because the Nasdaq is setting up for what might be that second key strategy we look for whenever we see a big move in the afternoon and big news tomorrow morning. Over on the Nasdaq right now, it's easy to see the Nasdaq 60-minute chart is obviously bullish overall. Again, we're not going to use a time chart to time the entries. They're not as good as tick charts. This, of course, is a 4,000 tick chart there, upper left-hand corner. And you can see a lot of the same basic clues on the Nasdaq. There's that trading range. Anytime we see a range breakout, we always look for a breakout pullback zone. Anytime we see a big move in one direction, I look for that two-legged pullback. So man, oh man, what a great spot right there on the Nasdaq on that breakout pullback. But again, on the Nasdaq though, and also on the S&P too, this is not just the Nasdaq here. Whenever I get these big moves in the afternoon with big news tomorrow morning, I want you to think about a trading range. Ranges are very common ahead of big news after a really big move. Now, the same basic plan still works in the Nasdaq. I still want that two-legged pullback. I still want that two-try failure. I still want that bear trap on the way up, and if we're lucky, we'll get that bull trap, right, to short that sucker back down again. Same game plan on the NQ, as we mentioned earlier, on the S&P. But I'll tell you, if we go sideways tomorrow, sideways ranges are oftentimes the most lucrative way to trade, and here's why. Ranges act like magnets, and they love to rotate back and forth like a pendulum. We saw an example today, of course, on the Nasdaq, right? This is that range we mentioned in last night's video. There's the pendulum swing below, and of course, I went a bit further on that this afternoon, but that's the overall idea, right? It rotates off that low. So if we understand that kind of basic core principle about how ranges work, if we start going sideways in that trading range, the goal is to find levels of support underneath that trading range and get that rundown, and same basic idea, right? Get that bear trap or that failure pattern, right? Bears once, bears twice, again, at key levels of support underneath that trading range. We'll talk more about this, of course, tomorrow morning in our trade room, but find levels of support underneath that trading range, use that failure pattern, get that separation off the moving average, and watch for that bear trap pattern. Now, here's where things get interesting in a range market. Remember, back on the S&P chart, I talked about shorting a retest of that high. This is not the game plan in a range market. This is why ranges are oftentimes more lucrative than simply a straight two-legged pullback. Because now, where does the market want to go? The market wants to rotate not just back to the high, but it wants to take out that big pendulum swing on the opposite side. This is where ranges can make a lot of money in a very, very short period of time. It's the same basic idea, right? It's trapping those bears below it. It's grabbed that bear trap on the way higher. But now, instead of shorting off that top now we'll take a piece of profit off the top, but please leave a runner on these and leave that runner all the way to that pendulum swing on the opposite side of that range. That's one of two ways I trade this stuff in a range market. Where the fun really begins is with this. Oftentimes, after a big move higher like this, we'll get this breakout going higher. This is a very, very difficult place to be a buyer right now, right? Because we're way, way high up in the 60-minute time frame, and that range below us acts like a magnet. Now, remember earlier I said about that crown reversal pattern? I like to look for these, what are basically bull trap patterns. Buyers try once, buyers try twice, and again, the key here is getting that short above that prior swing. Now, think about this. As the market runs lower, this will feel very, very bearish. When I was a rookie, I would think this is a bearish reversal, right? It's not a bearish reversal. It's a nice, deep, juicy pullback in an overall bull market. Remember, we know where the market wants to go. That becomes your profit target on the bull trap off the high. And again, we're not going to blindly buy into it because it may keep on going lower. What I will do, though, is that once that 21 EMA pulls back here, now do it again, right? Bears try once, bears try twice. There's that failure pattern. There's that, what was it again? That trap pattern, that higher high in price, that separation off the moving average. And again, about that rotation back and forth. Now, sometimes we get lucky at this, right? Sometimes it'll run up. We'll get that 1-to-1 first target. They'll hold the underbelly of that range. And remember, if they go back and retest that low again, do not confuse this with a reversal, right? It's only a double bottom retest, right? Trap those bears in. That same double bottom retest mentioned earlier is the same basic game plan. I'll tell you right now, you will quickly become a huge fan of double bottoms overall bull market because these are oftentimes the most lucrative trades we see each week in our trade room. So don't be surprised if we see something that pops above a range, fake out breakout off that range high, that run back down, it will feel very, very bearish down there. Do not take the bait on that. Trap the rookies in, squeeze those stops back up, leave that runner to the high of that trading range. And again, if the bears get lucky, if they can hold the underbelly of that range and retest that low, it's not a bearish reversal at this point. It's simply a double bottom retest, as we call them. 2 tries for the failures. That's your failure pattern, right into that bear trap pattern and running right back up into that trading range. So watch out for that fake out breakout off the high. Those are 2 scenarios to look for in a range bound market. So now you know my 2 favorite strategies when we see a big move this afternoon in a big news event tomorrow morning. That is the game plan for tomorrow. Now don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. I'll put all the important links tonight. I'll put our free class links in there. Definitely start first on the free video course. Our trade room membership links will be down there for you. And as always, if you're on Twitter or X, give me a follow. Details description of that YouTube video. Right, guys? Hope you learned a bunch tonight. Hope you use knowledge to earn a bunch. And hopefully I'll see you sometime soon. Trade with me in the morning room. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.